This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless A Trading Frank. It's approximately 8:40 p.m. on June 27, 2019. Very important reminder, tomorrow is the last day of the month. Most importantly, it's the end of the second quarter of 2019. Very, very important date. There's a lot of the big multi-trillion dollar money management industry, the mutual funds, the pension funds, the hedge funds, and other institutional outfits, which basically control the bulk of the money that runs through the markets. It's the end of their second quarter. Simple as that. To us, it really doesn't matter, right? It's the end of the second quarter. So what? But it's extremely, extremely critical for anybody who's involved with the markets as a trader, as an investor, to keep in mind that there is a lot of activity that takes place, and it also happens to be that tomorrow's Friday. So it's a Friday. It's a weekly OPEX or options expiration. You have the end of the second quarter, and most importantly, you have the specter of the massive meeting between President Trump and Premier Xi of China that takes place, believe it or not, on Saturday afternoon. But we're going to get snippets of information, as you saw today, back and forth coming out of Osaka, Japan, because they're all there right now. They're all there right now. So get ready for a busy day. Nothing to really worry about that much. We have our charts to know where we can drop to, where we can move to. And so far, we have multiple stocks which have really nothing to do with China and which are doing extremely well. We get so we'll talk about that stuff. We'll devote a portion of time, going through a whole bunch of stocks that I'm suggesting and which are working out extremely well. So, on that note, welcome. Keep these sessions, these strategic live webinars that are designed to benefit and help all members and free trial subscribers and anyone out there with the internet connection, as I'd like to keep on repeating. Feel free to use them thoroughly, understand what I'm talking about. I try to make it as simple as possible when I'm talking to addressing all my traders and members, and not make it super complicated. Okay, I don't want to. This is not a game of trying to show you all how intellectual I am about the stock market, because in reality, I'm as clueless as anybody else, except I follow my tactical charts. I have a sense of what can happen on the upside and the downside, and that's it. Okay. Full disclosure: this is purely for financial education, not for any solicitation or advice. Do spread the word around. We have a few new members that have come about from our Instagram promotion that I do. End of the day, I put out some of these highlights of some of the killer option trades that we do. Obviously, put up there for promotion purposes the best ones. That's natural. And tonight I'll do the same thing. I mean, we have some killer options trades out there that we have done just today alone. So please follow us there. Tell your friends to follow. Increases the follower count, approaching almost 600 members. I mean, sorry, followers. Once it crosses over, I think 1,000, the algos pick it up and spread it around more, and we get a bigger following. We always need new blood in our group. It's always great to meet great new people. I've met fantastic people. Everyone here has, I've spoken to them personally. You know that, and it's exciting. All right, now back to the stock markets. Well, the stock markets are doing what I expected them to do based on my tactical approach on viewing the markets. Um, from the past couple of weeks. Uh, Listen to my. I'm sure some of you, when you listen to some of the past webinars, and because you couldn't attend, which is fully understandable, then you don't need to listen to the whole thing. Sit there and spend an hour and 15 minutes there. You can always fast forward and listen to the more important points that I'm talking about. Okay, use technology to your benefit. So, but you have to get the gist of what I'm saying, because I'm not here to write a long blog and, like many other services do, long-winded story about how glorious my service is and how many great trades we're doing. I'm trying to explain to you the complexities of the market in a very simple way so that you all can understand and move on with that and try to become more proficient in trading charts, more proficient in managing your trades, um, and such. Okay, that's all. I know it's the obvious, but I have to state it. So the broader picture is that the markets are doing exactly what I said they were going to do, pretty much to the T. The markets are down 300-400 points. I look at it. If my indicators are showing massive oversold conditions like they were as recently as yesterday and the day before on the 25th, I said we would have a pretty vicious rally um, within the next 24 to 48 hours. Well, lo and behold, that's exactly what we got. It's not luck, believe me. Okay, it's not luck. I get more lucky, I guess, because I'm more prepared. It's really as simple as that, and I think that's true of life. So the more, so anyway, so the bottom line is that we're going to go through a couple of things here. We're going to look at the short-term charts. We're going to look at the long-term charts, give you guys an idea about the market. But the key is what's going to be the outcome of the Saturday meeting with President Xi and Premier Xi and President Trump. Look, it's a binary event, meaning it's either going to be a plus or a minus. The minus doesn't mean we're going to go plunge. Initially we're going to plunge a couple hundred points. There's no question about it, right? On Monday, if there's no deal, and if they start name calling each other, which they're not going to do, because President Trump, regardless of some pretty powerful tweets against the Chinese government, some of the policies that they follow, has a very respectful relationship with Premier Xi, and he said that many times in his speech. And as you know, our boy Donald here from New York is a very people-oriented person, right? So and President Xi has also been very respectful and has not got into any name calling type of garbage with President Trump either. They've both called each other their friend, and I think that's good. So whichever the case, and this is important, what I'm going to say in the next 30 seconds. My reading is that they are basically going to okay, let's look at scenario one. The scenario one is they remove all the tariffs. Not going to happen. Okay, so let's write this down. That's not going to happen. That the current tariffs that are in place. So tariff, I'm writing it. I have to get my little writing board out there so I can write all this stuff. But I didn't get a chance to attach that. Okay, tariff. Okay, gone. That's a very, very low probability event. So on a scale of 1 to 5, one being least likely and 5 being most likely, this is probably a 1. Number 2, additional tariffs. That's the 300 billion that President Trump has threatened, which encompass pretty much all the imports into the U.S. from China, which is kind of borderline ridiculous. Okay, additional tariffs, the 300 billion that he wants to slap 25% on, or up to 25% on. There is a likelihood of, let's call it 3, like 1 being the least, 5 being the most likely. There's a probability of 3 that will be delayed for another 60 to 90 days while negotiations continue. Okay, so the additional 300 billion gets delayed. The markets on that will rally, and this scenario comes into play where we will attempt to basically go back. We're pretty much around the corner from the past all-time high, but there's a good possibility that the market busts a move above that, and goes towards that 2983,000 level, just like that. Boom. All right. Number 3 is so the additional 300 billion doesn't go into play, okay. Number 3, that China basically agrees to comply with that, what's it called? Section 321 or something, I forget, the trade thing about patent infringement. So China says, you know what? no problem. We're going to comply with that. And China is obviously, it's pretty obvious, right? That they are asking, or that one of their demands is that the ban on Huawei. I finally said it right. It's not Huawei, like I was murdering the name. It's their, it's one of the world's largest tech companies. Like Huawei, the ban on Huawei to be eased. And President Trump has indicated that he might just, you play that as a negotiating card on the table. So China tech ban is eased, and that itself, China tech ban is eased. China agrees at the same time to buy crap loads of agricultural products because our farmers are hurting. They're hurting. Okay, trust me. The biggest export market is China for all the grains and everything else. So China tech ban is moderated, is eased. So you guys need to know all this stuff, because when those headlines start flashing, you have no idea what's going on. I'll try to explain, but still, China tech ban is eased, and China says they're going to buy lots of farm. I'm just put farm. I really have to get my writing board out. It's too difficult. Okay, lots of farm stuff. Okay, farm stuff, agricultural products. So aside from that, so that would, again, couple of 100-point rally on the market. If there is a complete breakdown and they both walk away, and the worst case scenario, where the 300 billion tariffs are put in place within the, starting sometime in July, you're going to see the market basically make a sharp move down, retest. It's going to slice through the 50-day moving average, and we are most probably going to test that 2,800 level again. So you're talking about 600 to 700 points, maybe. I doubt if that's going to happen. I mean, that's like a complete collapse of any type of negotiation. It just doesn't make any sense, because it hurts China, it hurts us. You can't escape it. Okay, so that's it. So those are the scenarios. The worst case scenario is that's it. They walk away. That, forget about it. And Trump says, Xi is not my friend. I mean, just kidding. I mean, seriously, you never know what tweet he puts out there. So and that's a extreme scenario. And the other extreme scenario is that they remove the current tariffs and delay the 300 billion tariff. Now, that's another extremely positive scenario, which is not going to happen. Somewhere in the middle, where they give it a little bit of break on Huawei and other Chinese tech companies doing business here, delaying the additional 300 billion in tariffs, has a handshake agreement. And keep in mind, these things have already been spoken about. And it's just for public edification. They're going to make it known, like, both the press releases will come out on Saturday afternoon or Sunday. So so the best case scenario, additional 300 billion is delayed, and the China tech ban is somewhat eased. Then the markets really fly. Okay, that's it. Any questions on I just try to make it as simple as possible. Worst case scenario, nothing happens. They both walk away. Market drops. Like everything falls. Healthcare rises. Could be one of those days where tech's down big and healthcare's moving up, because no China dependency there. Food restaurant stocks could be moving up, but it's not going to be net a positive global picture. Okay, and so that's basically it. News is breaking. Oh, this is Joe Biden square off. Who cares? All right. So let's look at the charts here. Any questions on the explanation on the G20 summit and what the outcomes are? Anyone? All right, good. So here's your longer term picture on the daily. This part looks great. You can call it a cup and handle type of thing. Both two handles, another handle, nice fat green from yesterday, right? And this is where we are right now. Futures are up about 5 and change. That's where we are. This part is a little bit bothersome because we crossed down. Keep in mind, we crossed down, but today we managed to, and I want you to look at this very carefully because by looking at this, I can tell to a high degree what the markets are most probably going to do, or where the potholes are, where the minefields are. So, and you guys can do the same thing too. So you notice how we were crossing down. I mentioned caution yesterday. I did, but today it kind of pulled up a little bit again. So this is good. So this crossover needs to basically go higher in order to get this cup and handle to move towards the previous highs, which was in the 2161, 2162 level on the E-minis. On the S&P 500, I believe we printed I can't remember what the intraday high was, but which was 2964. So bottom line is, on the positive outcome, we're going to overshoot and we're going to get towards 2996, possibly 3000 or 2980. I don't want to get too accurate, too detailed on that. Just giving you guys an idea that that's what's going to happen. On the other side, we have if we have a crossover of the 34 and the 50 positive. This needs to basically curl up, because if it keeps on moving down and the market kind of dilly-dallies around here, you can rest assured it's going to fall and retest the 50 and the 34-day moving average somewhere around 2880. So simple English, you're talking about 2880, like around 300 points or so. We could drop just like that. Okay, and you're going to have this thing crossing down, which means from a swing standpoint, the market wants to reset lower. We're not there yet. We're not there yet. So that's the picture. But if you just quickly look at this picture, it is still a cup and handle. Pure simple technical stuff. It's fine. Okay, next. We have that's your daily chart. Let's take a look at the weekly. Didn't get a chance to look at that because we're so busy making money across the board today. Let me see here. Where's my weekly? So this is giving us a quick picture on the front side, and I will tell you that the weekly is starting to send us a slightly cautionary signal. All right, so that's just want to let you all know. This is still a bull flag, but that on the weekly is a red doji. There's nothing wrong with it. We had a red minor doji on the week of June 10th. Then we had a huge rally. So we could very well do this without a problem. And I wanted, and by now people who have taken all the ACS sessions and stuff, they know very well, and I've explained it on the webinars too, that this, technically speaking, is still a bull flag. What does that mean? It simply means it's a bull flag. There, it still is. If it starts to expand lower and breaks below these two lines, which is an uptrending consolidation bull flag channel, and it breaks below, let's say 2920, below not 2920, if it breaks below let's say 2910 or 2900, then all of a sudden all hell breaks loose. But I'm not going to be sitting around watching the market drop below this bull flag channel. I'll obviously be telling you all to short. This is a little bit worrisome because the weekly is starting to buckle. Not a big deal. The weekly has buckled before and the markets have still gone higher. So it is still too early to tell, and the market doesn't know either. I don't think the market knows exactly. You think the algos know exactly what Trump and what kind of dance they're going to be doing? Are they going to be doing the dragon dance, or are they going to be doing like karate fights? I have no idea. I do believe that, like I said, my gut feeling and my understanding tells me that they're going to have a somewhat of a okay resolution, and that will help the markets and these technicals will continue in a format like it did on this type of move, which is already doing, and this one won't cross below. The stochastics won't cross below. Instead, they will move sideways, in which case we have more room to move higher, which means we have a couple of 100 points to move higher and possibly hit SPX 2990, 3000. So far, so good. Body of this candle is still within, it was getting tricky, I'll tell you, because if you look at this tail, the low was 2913. It looked real close that we were going to hit 2914, that we're going to hit below that. Just forget about the numbers. This is your acceleration channel. So if it breaks below that, then obviously it's no longer a bull flag, right? But it didn't do that. It came as low as it still stayed within the body of this long-term weekly channel. Everyone, keeping it real simple, but you have to understand the power of these charts are enormous, enormous. So that's your weekly. This is your daily. So far, looking good. Futures are up right now at about 6 points. No big deal. This is where we are. This is what happened today. This is what happened the last 2 days, freaking people out. I told you there was going to be a big rally, and it was a big rally. End of story. One of the only businesses in the world, as I like to remind people, where when things get cheap, no one wants to buy. Any other business, when you were in the market for a car, for an SUV, say, for example, and they drop prices by 40%, you go running in there and try and picking up a lease or buying one. As stocks get cheap, a lot of people out there, hopefully not too many of our members, they're like, no, we can't touch it. Oh my God. And those are the times to really buy it. But you have to know when to buy it, and that's where the charts come into play. But seriously, I've seen this happen over and over again, year over year, from my Wall Street days. Market drops a bit, and everyone's like Chicken Little. And it's like, oh my God, I can't touch the market. Dude, it's on sale. Pick and choose and find your levels that you want to buy them in. Not every day do you see Amazon down $47. Like, what is going on? Seriously. So, anyway, that's fine. Let the losers stay losers, and us as tactical traders, we will continue to win in all types of market. We can't be green every single day on our P&L, but you set up the trades, and within 24 to 48 hours, your beautiful P&L, profit and loss section of the table will be beautifully green, and you will have multiple winners, and you will have some losers, but net, you will move ahead and grow your account. That's how the game works. Not some bullshit trading service out there who tells you that you got to make money every single day. No, it doesn't work like that. You want to be a day trader, you got to be fast, you got to know how to trade. I show enough day trades which can generate 40, 50, 60, 100, 200%. Today alone, HHC was 150, 70, 200%. That a company you guys had never heard of, Howard Hughes, okay? And stock exploded. Could have jumped on it. A lot of them. What about OC? Right? Owens Corning, like ripping higher. All right. All the trades are there on the Twitter feed for newer members like Jill and other people who have joined us recently. Welcome. Everyone, welcome Jill. Make sure that you go to the Twitter feed. You see what we did, and you'll know. So I don't have to repeat all the symbols again. Okay. Now here we have this is your hourly chart of the actual S&P 500. No E-minis, nothing. Same thing, but still. So here, you can see here very clearly, it's a large rising wedge. Big consolidations that have lasted for a couple of days, maybe 2 or 3 days. Then the markets have moved up, little consolidation, broken up. Now this consolidation, now we're here. Now this is the thing that is worrisome from a tactical trading standpoint, and we have to be cognizant of it. I mentioned this. This is your head. This is your left shoulder. This is your right shoulder. Remember, this is what a head and shoulder looks like. Right? And you have a neckline. There is so here's your double, it's a double top. Here's your left shoulder, this one. Here's your right shoulder, okay? And here's your neckline, which is around 29.14 again. So if we break the neckline, we will fall rather quickly. That could happen any minute. Not just a non-deal at the between China and the U.S. It could happen on a tweet that comes out tomorrow, or Larry Kudlow, or Trade Representative Lighthizer, or Mnuchin, says something in the middle of the night, well, out there it's morning, and you would see that neckline break, which is here, and the market will fall real fast towards first it'll find some support here, the lower gap. Remember, this is a gap, and then fall rather rapidly to this neckline here. Remember, this was also, so here's your big head. Here's your, see how this pattern works? So now, if things are favorable, we're going to break out, like I said today, read the part, I'm sure many of you did. It negates the bearish head and shoulder. This is a bearish pattern. So if it moves above the right shoulder, that means it becomes a W. We like W's. They're known as dragon bullish patterns, like this. But in order to form that, it has to break powerfully over the 2932 mark on the S&P 500, and then it's not this pattern anymore. Now it's a nice W, and we love W's because it makes us a lot of money, right? Now, if you're short, and we can certainly, I mean, it's tricky to short this market, I'll tell you that. So, so if we break this neckline and I see a large red candle breaking the neckline, you can go short for a good maybe 10 to 20 S&P points. It is going to be very quick. 10 to 20 S&P points means 100 to 120 Dow points, and you could make yourself a double on your money if it happens intraday. Remember, let me clean this out. Here's your head. Here is one shoulder, two shoulder, right? So we're attempting, hopefully, something positive comes out middle of the night, whatever, and we could just make a move towards the highs again. This is also the left shoulder. So this is your left shoulder, right shoulder. Here's your first neckline. Here is your second neckline. Technicals, baby. That's it. That's it. I know where we can fall to. I know where we can rise to. I don't know the exact timing, how the market's going to show its hand, so I follow these very closely. And I know most of you do too. So there you go. So this head and shoulder pattern, I repeat, is still intact. It is still bearish. It is still bearish from a swing perspective. Short term, you can trade these moves back and forth. This is your critical support at 2870. And this is your support at 2900. If we break, can we go all the way back to this big dotted line, which is not there for fun? That's your 50 Fibonacci 50 level on this time frame, which goes back to March. This is actually a chart from March. Okay, so bottom line is that's why we have this 50 fib. If you remember, we had crashed up on March 3rd. I'm sorry, June 3rd, and we rushed back to the 50-day moving, not 50-day, Fibonacci 50 level right there, right? So this is massive support. So if all hell breaks loose, we should find support in the 2838 level. That's a long way off from here, and a lot of things are going to get hurt. We shall certainly attempt to make some real decent money on the short side. At that point, you need to just bail any long position if we start to see a massive breakdown. But we don't know yet, so we shall see. And I'll certainly alert you guys. Remember, markets are fluid. You have to be flexible. As you do this more and more, your flexibility increases, and you tend to move faster and better. So that's it. Now, next is your this is that same chart, except these are the futures. And so far, we still have that head and shoulder pattern, right? Right there is a double, triple top. This was the big high. This is your left shoulder, and we are right at the right shoulder right here. You can see that right there. Okay, here's your neckline at 2911. Here is another major neckline down here at 28.72. That's quite a bit down, so I'm not even going to go there. This is what I'm focusing on. So nothing really happened today. I mean, it's still stuck there. It's still fine. Bulls will say, hey, we look like it's going higher. Bears will say, no, this is definitively going to break, which is below 29.11. Well, the Bears don't know, and the Bulls still have the advantage. Remember, one of the things about trading that I've talked to you guys a lot is your cognitive bias towards life and trading. If you are inherently a pessimistic, dogmatic, bearish, pessimistic person who looks at the glass always half empty, then you're going to look at this chart and look at a very negative picture. Somebody who is bullish on life and has a perspective of a win-win type of mentality and is not always grounded in the massive reality. Oh, that's realism. Realism, in some ways is the same as pessimism. Okay, so they will look at this chart. Who is, a bear will look at this chart. A pessimistic person who always thinks the U.S. economy is going to hell in the handbasket. Stock market's always overvalued. Blah blah blah. You always have those people always bad mouthing the U.S. Like, I don't get it. Seriously. Just not bad mouthing the United States, but bad mouthing our markets. Everything is bad. Our companies are bad. Everyone's a crook. Like, holy cow! Like, what are you doing here? Just give your passport and move to Mongolia or or move to Venezuela. I mean, I don't care. Seriously. But people like us who believe in the power of U.S. companies, who believe that despite all the flaws in our political system, that things actually do work, and who truly believe in the fact that we are in a cyclical bull market that have gone on for a very long time in between very large crashes. We look at charts and we obviously have a cognitive bias, which is a little bit more on the bullish side. Yet I am explaining to you the short-term bearish side, also giving you the reasons why we can fall 500 points or 1,000 points and decimate long positions. Seriously. So I'm a tactical bull. I'm a long-term bull with a tactical bearish outlook, depending on what is in front of us. Remember, we have $6.5 trillion sitting in cash. That's not a joke. Everybody and their grandmas are bearish, and they're showing that by their actions. Both traders and investors, and I'm talking institutional investors and hedge funds, they are totally underinvested in U.S. stocks. Yet U.S. stocks are actually shrinking. Can somebody tell me why I said that? Why are the amount of shares available for people to buy in the United States financial markets shrinking? Come on, somebody step up and give me some sort of answer, please. Why is the supply of shares out there for other people to buy shrinking, which is causing prices to remain elevated? Why?
Share buybacks.
Thank you very much, Mike. Okay, so did everyone hear that? Number one, share buybacks. Companies are the biggest net marginal buyers of U.S. stocks. Why do companies buy their own stocks? Because they find that it's cheap enough for them to buy it. Okay? The average mom and pop don't want to buy stocks. No, they just want to go, make America great. But we tell them to buy a stock, they're like, no. Okay, great. How do you make America great? By not supporting one of the strongest pillars of the United States economy, which makes us the ultimate power in the world, our financial markets and our military. Those two things that keep us going. Without those two, we're done. All right? So you tell them to buy some stock. Oh, no, I don't touch the stock market. Okay, great. All right? So the hypocrisy of the whole thing is laughable. Seriously. So bottom line is, number one, share buybacks. U.S. companies themselves are net buyers of their own stock because they find value in it. And amount of dividends given out to U.S. shareholders has been increasing. Look at what the banks are doing tonight. They all have raised their dividend things because of the stress test. They all came out fantastic. So from Citibank to JP Morgan to Goldman Sachs, they're all raising their dividends. So if you're long-term holders of those stocks through your mutual funds, let's say, then you are getting paid on that higher dividend. And the other reason why the number of shares are shrinking, supply of shares are shrinking in the overall market, is amount of buyouts. When a company buys another company, that company's shares disappears off the market. Get it? So what happens? You have lesser amount of shares to buy. You have lesser amount of companies to buy. Then you have some IPOs coming through, which is like having babies. Like, look, you gotta have when populations shrink, right? In a nation, eventually that nation dies because there's no rejuvenation, no young people to keep it going, right? The old get old and pass away. So what about putting in having new additions, babies? So the babies are the IPOs, all right? The initial public offerings, these companies which are coming through full force. Some of them will be $10,000, $2,000 stocks in a couple of years' time. We play some of them. We've done very well in some of them. They're too early to tell which ones are going to make it, which ones are not going to make it, right? So those are the babies. So, but that's very few amount of IPOs versus the amount of companies that are getting bought out and stock buybacks, just so you understand that. So there you go. So that's another positive demand to keep the stock market going higher. All that cash sitting on the sidelines. Many of you always freaking out when the market's down a little bit because of the volatility is designed to mess with your brains. You know that. Yeah, I hear all the time, oh, I panicked. Like, okay, great. So why don't you start really focusing on the charts and you panic a little bit less? Imagine you're a doctor, and every time you saw somebody with blood with bleeding, you panicked. Like, okay, good luck. That patient I don't think has too long a longevity left. So please stop panicking so much. Be scared, but don't panic. Fear is okay. All right, so that's the story. Now, this is the chart that I put out there. I don't want to get into it too much. You guys can read the definition on that on Investopedia. Google it. It's called the Gann fan, Gann. The Gann fans are very interesting, and the reason I put it out there, just so you all understand, is not for cosmetic purposes. All right, to make everything look pretty. The reason I put it out there because that like Fibonacci retracement, the Gann fan is when the markets are so choppy. Look at that. I mean, this is one. It's like a old-fashioned traditionalist technician will look at this chart and say, "What is this?" Well, this is the U.S. market since the 18th of June. All right, since the 18th of June. So when you put the Gann fan, it actually starts to make some sense to me, and of course, all these different patterns and lines that I can see. So the Gann fan basically is telling us that we can get down to a low. There are 8 fans, right? We can get down to not 8, 1, 2, 3, 4, 5. Okay, read up the definition on that because I don't have that directly in front of me. I use this time to time, telling me that on the low end we are looking at 2908. Worst case scenario 2902. Each of these fans get retested, each of these lines, and if you notice, this is the interesting part, right? It's magic how it happens. The market has actually been tracking fan line number 3. Look at that. See? Interesting. The next expansion line is all the way, is obviously a lot higher. So the Gann fan is there just to put these very choppy conditions in perspective. You don't have to super analyze it, but you will notice that it does follow these lines. If we have a big breakout, and this pattern could very easily be completed by tomorrow, we get to 2950, where big sellers of automatic algorithmic high frequency trading sellers come in. You can see that. It could be a cup. We could pull back a little bit, maybe 10, maybe 30, 40 points, and then we could make a move, attack the highs again. We shall see. So that's basically the market right now. But you can see here there is a pattern to what's going on. Lots of zigzags, but at the same time, you can see that this can be looked on as a complex, what we call inverted head and shoulder. Left shoulder, right shoulder, neckline, just the opposite of a head and shoulder, and then a breakout. So we are at that level here which is considered to be a neckline. There. So this neckline needs to break out over that 29.36, 29.37 mark, and then we can make a sharp move, another maybe 100, 120 points. Okay, now stocks. Let's talk stocks. Give me a stock, one of you want to look at that, that you're in right now.
I'm not in it, but can you look at Cisco?
Oh my Lord. Okay, I will. I said, oh my Lord, why are you looking at Cisco? Okay, I shouldn't say that. It's your choice. Hold on.
Because it's been treating me right for the last month.
Oh, it has. Okay, that's a good enough answer. I like that. So Cisco's chart right now on a daily is basically, so you got into Cisco what, in the 50s, in the low 50s, or in the mid 50s? Where'd you get into Cisco?
I got into it a few times. So in the low 50s, and then sold, and then I got back in, and then it was the mid 50s.
No problem. So
But
Cisco,
I noticed that it's usually a pretty consistent. I mean, I haven't been trading long, but since I've been trading,
it's a consistent mover.
it's consistent.
Yeah, because it's a big cap stock. You know what I'm saying? So it's a big cap stock. So it's a slow but consistent mover. It's not like one that's going to jump like $10. You know what I'm saying? So Cisco is like the Walmart of the technology networking side, right? So Cisco's daily chart is telling me, there's some big sellers in there. You see these candles? Very simple. You just have to look at the candles, and you can see that after it hit 58, these are big sellers. There's a lot of volume. Now, part of it has to do with the fact that the overall tech side got hit. But one of the things that's interesting is that our tech stocks like NVIDIA, like Micron, those things are flying through the roof. But Cisco has been missing in action. So on a technical basis, nothing really wrong with it, but nothing at all exciting about the chart that excites me. Given the fact that the tech stocks which are really moving are the ones which are moving off the bottom, the ones which were recommended, like NVIDIA. NVIDIA crossed over and sliced like butter through the 50-day moving average on the upside. The calls were up 140%, the 160 strike calls, 165 strike calls were up 70%. I'm talking just today from yesterday. So Cisco's chart is fine, but to me, oh, I think she got bumped out. To me, it's nothing that excites me too much. Let me tell you stocks that excite me, okay? So if China deal works out, you got Alibaba, it's right there, that gap fill. It's going to go straight up to 180, which is the long-term downtrend line right there. We've been trading it all the way from the 160s, back and forth, and you can see here clearly that this is going to be the first beneficiary of a China deal. It's going to slice through this gap. The 175 calls, having a little bit of it doesn't hurt. Internals are looking great. If somebody says the China deal happen or not, let's put it this way. If I look at stocks like Alibaba and JD.com, which are these big China players with directly tied in with the Chinese economy, they're telling us by looking at the internals, look at the MACD, that things are going to be fine. If you really want to read the deal making process through the internals of Alibaba, it's telling you it's fine. It's gonna work out, because look at this. This is a very powerful MACD, and I think and I know all of you can see it. So the 175 calls, these things are pretty good, and we are above the 50-day moving average right now. And God help us if we get a deal. This thing is going to go straight up to 180, and do not be surprised if it goes to 190. It's going to happen very, very quickly. Okay. Let's take a look at NVIDIA, which is NVIDIA's chart is very exciting. This is a daily chart of NVIDIA. I mean, I've been showing this to you guys for a while now in many different forms. So am I in NVIDIA? Yeah, just want to make sure the symbol is right. So if you look at NVIDIA, this was a $300 stock, okay? It's got a lot of upside. The pattern completion in NVIDIA, honestly speaking, is all the way here on that gap, and that gap happens to be $190. That's a lot of money. And I can keep on telling you all NVIDIA from about 145, 143. I think initially we bought it at 140, but most of the trades we were doing were from the 140s. It's at 163 right now. Stock was up huge yesterday, huge, $10, I think. Today, it was up huge again. This is the power of momentum. Now it's above the 50-day moving average. Look at that. It's crossed over the 50-day moving average. I mentioned that to you guys yesterday, that this was most probably going to happen. And we're looking at 172, and the 200-day moving average, this line crosses at 177. Now, if you want to look at it very simplistically, on a longer term basis, the tide hasn't even turned, because both these lines are still, both the 30 and the 50-day moving averages are still floating down. So you're early in the game, because when this starts to turn and this starts to turn, this stock is going to literally hit $190 to $200 and just cover here. Forget about this spot. Why? Exactly. These are exciting, both from a longer term perspective as well as from a short term trading perspective. Let's take a look at stock that just broke out and calls went from literally 10, 15 cents and hit today, hit $3. Okay, Owens Corning. From 15, 20, 25 cents yesterday, hit $3. It's up more than 1,000%. Okay, gotta look outside the box. Look at this. I showed this. I turned my head and I started moving like bang, because one of a big activist investor, Vora Ventures, the Canadian, they have now taken a big stake, and these guys are big players, smart players. They've taken a big stake in Owens Corning, and they want to basically unlock the hidden value of the company by possibly asset sales or some sort of M&A activity. Stock jumped up like a monster. I know some of you are in it, and the calls just exploded, and they're still going. So this chart is very easy to read. I've drawn this. When did I recommend this stock? On Monday or Friday? I think I recommended right when I saw the news about before the Vora news, that there was the activist chatter. When you hear activist chatter, that means the big boys are moving in, and those are the best trades to play, honestly speaking. So this you have 51 just jumped up huge. So this one, upper end of the channel is around 62. If it goes to 62, you're going to make a ton of money on those cheap calls. We are long right now on the cheap calls, which are the 60s, because we sold the 57.5s. So if you buy the 60s strikes, they're like $1, a little less than $1. They'll be $4 by the time they get to 62 or more. They'll be for around $4, I think. So another great trade. This one was wild, and I think I don't know who was in it. I don't know, but if you weren't, then you missed out. It's still going. Is Howard Hughes? Okay, not the reclusive billionaire. I mean, this is serious. Excuse my French. Shit. This is real momentum trading. You think this happened? This is not a biotech stock that came out with the next cure for RET disease, which is retail emotional trader disease, right? No, this is the real deal. This is Howard Hughes, a huge real estate company, and we have big movement, again, activists moving in there, saying that they're looking to possibly sell the company. I told you guys to buy it when it was 119. It exploded, the calls. The calls were up on average 150 to 200%. The calls originally, you have to be fast on those calls. You just buy a couple or buy one. I don't care. I'm not telling you what to do. So you get that, and you get that it's like 260, 280, went to $8 almost, or 750. So and you roll them up, and then it was halted a couple of times. So this is a pretty serious. You don't see this too often, but that was one heck of a move, all because, in my opinion, some big hedge funds were heavily short this stock, and they got murdered. They got decimated. They got JDAM. All right. Because you can't have a move like that, a big stock like that moving. It's $100 stock. I mean, I could have gotten it earlier. I was like, couldn't believe this was going on, and yet it was still so powerful. The stock yesterday was $92. The stock was up 41%. You're not talking about a $2 stock going up 41% or 80 cents. You're talking a $190 stock going up 41%. Some hedge funds got killed. The short squeeze was so painful, it left them scarred. Hopefully they survived, because you don't get a 41% move on a $92 stock. Whichever the case, I showed the 131s, and it looks like, hey, it's a straight line up. So I don't really care. I mean, I sold out the heavy duty ones, and I'm mostly long the one. I have the 130 and the 155. The 130s are $6 now. They were up literally at more than a double. And you can buy the 155s, which was the most of the highest strike you can buy. What the hell? If they're going to go through with some sort of M&A asset sale and the company gets bought out or gets absorbed by somebody else, the stock is going to go to a lot higher. And the way we can see that is we can look at the weekly. It was a $160 stock, and this is what we are. Pattern completion comes into play at 142. Great trades. Then we have, well, we have quite a few of the stuff, but let's take a look at Sage. This company is such a powerful company. This was yesterday. It was down like $5 or $6. It's a buy. This is a very powerful chart, ladies and gentlemen. Okay, this is Sage Therapeutics, heavy duty. I believe it's cancer research and all that stuff. I got a weird feeling this company is going to get bought out because this chart is too good looking. It really is. Okay, and no one talks about it. You ever hear Sage Therapeutics on CNBC? Nope. Great. Let's keep it that way. Now on the weekly, I spotted on the weekly, I spotted the crossover, the massive crossover, the death cross for the bears. Look at that. The 34-week is crossing over the 50-week. Holy moly. When was the last time that happened? Hasn't. It crossed down below the 50. Now it's crossing over the 50. Whichever the case, the calls are cheap. But, July 19th is weeks off. Weeks off. You'll buy those babies at a buck and change. Right? They were like, I was trying to bid for them real cheap, and then by the time I had some, and I was trying to add some more, but they wouldn't give it to me. When I know they're not going to give me something, as I'm bidding for in between the bid and ask, I know there's something going on. They pushed it up from literally the spread was like 10 cents to $1. They pushed it all the way up to now the spread is $1 to 280. You tell me. Whichever the case, let's put it this way. If the stock breaks out, let's keep it simple. This is this rising wedge. It's retested it, moving it up. I have a feeling it is now, and it had a big hammer reversal. You see that? I love hammer reversal. So do you guys? You see that right there, right? I have a feeling it's going to bust a move towards 200. And if it gets bought out, see you later. Okay? So here's another one. There's a lot of big biotech mergers are going through, guys. All right, you gotta have a little bit of, you gotta have a little bit in there because you never know which ones are gonna go. I do my best to select the ones I think, and even then, a lot of them have slipped me by that I didn't even know the names on, and like boom, they're up like 50%. This is also a good-looking chart. This is Sarepta. This is a weekly chart. I'm showing you the longer-term picture. You can clearly see here in between this wide range. This is a wide range, right? 100, like 40, 50 points. I am detecting remember, the stock basically broke out of a range when it was around 100. Then it created this massive bull flag, my opinion. Look at that. Okay, so it's basically at this point, a break over 140 will push the stock up into 160, 180. Remember, they don't follow the same trading patterns that the Netflixes and the Facebook and the Apples of the world. But something's going on with this baby. Sage Therapeutics was up $9 today on that and created that massive reversal hammer. This thing turned around and was up $3 today. Excuse me, one of my dogs. So these are exciting. Okay, these are very exciting. What's the other one that I wanted to look at? Let's take a look at Grub. Grub had a little minor issue today. You know, they were fined for overcharging restaurants. That's old news, nothing bad. So the stock was slightly down today and came back pretty strong. But this is a good one. Grub's chart excites me because of all the great partnerships they're doing with Dunkin' Donuts. They're going to sign up other restaurant chains. So this is the weekly chart. You can't even tell that the stock was down 65 cents. Grub has crossed over the 34 on the weekly. Each one of these levels, in my opinion, is a high probability of engagement, which means high probability of putting some fat dollars in your pocket. There you go. The 50-week moving average is 90. Most analysts have a target price between 90 and 100 plus. Whichever the case, I expect the stock to go to at least 80, 83, and pattern completion at 88, possibly 90 to kiss the 50-week moving average. So how does somebody say, oh, I don't want to trade, I don't know what to trade? Like, come on. These are layups. Unless something really terrible happens in Grub and the whole chart pattern breaks down below the 70 mark, the stock is a buy. Look at the internals, heavy volume, beautifully curving up, full stochastics. And this is the best part. The histograms expanding rapidly. This is known as histogram expansion and a crossover to go with it. What more could we serve you, sir? Grubhub. Make it happen. So doesn't matter what the heck happens with this China stuff, you know, back and forth. Let's keep an eye on these selective trades that I'm showing, a whole bunch of them at a time, whether it be Owens Corning, whether it be MLHR, Herman Miller, which was up a gazillion points, MLHR, which was yesterday's largest earnings winner. Calls, I had them at 65 cents. They went to 5.5. Do the math. That's 700%. I sold them mostly around 4 and change. And I didn't even have that much. And it was explosive. You could have bought one. Okay? What's happening tonight? Tonight I gave you guys what's it called? I think one of my doggies got really excited with all these great stocks that I'm showing you guys. Hey, Bruno, easy. Sorry about that. That's Bruno. We have Bruno, Enzo, and Romeo. How do you like that?
Bye.
Bye. No, he's like saying, no, he's not saying bye. He goes, wake up, morons. That's what he's doing. He's like, wake up. Look at me. He's a puppy mill survivor. You know, looks like $1 million dog. He's the Papillon. And he's like, if I can do it, you guys can do it. The poor one has 8 teeth left because, you know, they didn't feed him at all and his teeth were rotten. That's what happens in puppy mills. You know, stupid people buy dogs from shops and that's what happens. Okay, that's another day's story. Let's see. What's the one that I gave you guys tonight? It's going through the roof. I'm like, whoa. I thought I had it right. Oh, PRGS. You got to buy these basket strategies. I don't understand. You know, I cannot emphasize that anybody could afford to buy one call. Look at this. I gave it to you guys stock 40. It's up $8. Those calls were 92 cents. They will open tomorrow at $5. Okay? Then you have Nike. That's up too. But slowly, but your Nike was down initially. But it's, let me see here, the 5-minute chart. Okay, so Nike crashed down to 79 and now back to 83. Not bad. Nike will most probably have a follow through. Remember, FedEx was down after earnings. It turned around, didn't look back. It actually went up $6 after that. I wish I'd held it longer because we did that FedEx intraday trade, but it followed through on that. Then we have STZ that's coming out tomorrow morning. Constellation Brands, so far it's up about 2 after hours. Earnings are coming out tomorrow morning. This is a high IV. That means it'll move anywhere from $5 to $10. It's a big company, right? Constellation Brands. So the hourly looks like this. I'll take 195 any day. So that's it, guys. Listen, tomorrow's going to be tomorrow. I mean, I've explained the whole thing, and let's be selective on our stocks. Buy names, different names, not the usual names that we're used to. I do a lot of homework behind the screens to come up with these great ideas, and I'm happy with it. I'm happy because I am less reliant on the whims of what's happening with this U.S.-China dogfight, and some of these stocks have nothing to do with it. They're doing the thing. I'm excited to see the movement happening, whether it's Humana, which moves up beautifully every other day, United Health, Anthem, all these companies that I'm showing you guys. So I'm happy to focus on the biotech side because a lot of M&A, mergers and acquisitions and buyouts are happening there. I'm happy to play some fast-moving stocks like Howard Hughes, HHC. I asked you guys to buy PCG, which I know some of Mike remembers. PCG is California thing. This we were playing from 10. We played it up to like 15, 16. Now it's back on the move again in a big way. The calls are given to you guys for $1. They are at $1.60. Not bad, 60% return. Literally, this is what it looks like. This is when it crashed and burned. It went to $5 after the California wildfire thing. So now they have the whole bankruptcy thing rolled up. They're getting funding, and obviously Mike knows about it, Mr. Murphy, California. So this is PGE Corporation, and I'm just looking to trade it up to 25 and up to pattern completion at 27.5. So just diversify your thought process when you're looking at the market, and then I will keep on keeping you guys posted and giving you the most efficient tools to figure out what's going on. And good luck to everybody. So I'll see you guys tomorrow. Thanks for attending. God bless you all.